Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. All right, so we talked about a test of the 50-day exponential moving average and upper band. Reached a little bit for that area yesterday. Yesterday's high, 38.22. We'd mentioned about a week ago that 38.20 was a key area. And that had a lot to do with these highs here, 38.19 half back on October the 6th, and 38.20 even back on October the 5th. So that area has been tested. Actually, you got a marginal higher high there at 22. Globex high, 18 quarters. So this 38.20 area, you know, if you're a bull and you want to get it done, you know, and head higher, you got to convert. You have to stay above 3,800. You got to convert 38.20 now and get up and over the top of that 50-day exponential moving average, which is coming in right around 26.27. Hourly chart, you can see, you know, we've had this zone running between, you know, basically 3,600, 3,620, and 3,800, 3,780 to 3,800 for a few weeks now. We talked about that at length yesterday, so it makes a lot of sense that we would go ahead and start to break up over the top of it because that's what markets love to do. We talked about the monthly pivot yesterday. Right now, that's trying to be support in Globex. You can see that from yesterday afternoon, you know, from noon on, we've kind of just really started to chop and consolidate between 37.90, 38.22. You got this 30 handle range that we were whipping and chopping in. You know, we did fine in the room yesterday. It was, you know, it was 20 something handles at the end of the day. But, you know, as far as, you know, I always ask myself, did I trade well? I didn't trade yesterday particularly well. You're not going to trade well every day, and you just kind of have to deal with it and move on. You know, it's definitely a first world problem because we hit our goals for the day, and we are ahead of our goal for the week. But at the same time, there's a lot of whip, a lot of chop, a lot of stuff is overshooting, a lot of stuff was coming in short yesterday as far as, you know, the normal movements that we like to see in the market. They did a big dip down there at 10 o'clock, down to that 37.50 area, and the bears had a chance to maybe turn around, break the Globex low, and then run it back in towards a weekly pivot. And but, you know, they did not get that done at all. And now you're basically looking at heading into Tuesday, you're really at day, you know, full 3 sessions from the breakup over the top of the daily midband, which is your green line here, where it's broken up over the daily midband. It really hasn't looked back. This is a slight little attempt at upper band, and I think if we came back in now to the daily mid from the daily upper band, I would call this move here. It's close enough to call it a touch of the upper band. So as far as upper band, middle band, lower band, that kind of stuff, yeah, it's fine. Which puts a little bit of pressure on the bulls to get up and over the top and more involved. So we'll see if they're able to pull that off. Starting today, you're going to start to see earnings start to come, you know, a little more fast and furious. You got Philly Fed today, Redbook sales, you know, house price index, nothing dramatic. But you've got, you know, after the bell, you've got some things that people want to see, like Google, Microsoft, you know, stuff of that, and that's gonna, you know, that's gonna for what it, you know, for what it's worth, it's gonna have an effect on the tape. As far as where prices are, or I'm sorry, where levels are right now, you've got volume weighted average price locked up with the hourly mid band right in around 38.05. So this is going to be important. Do we want to live below here? Do we want to live above here? This bandwidth is not sustainable. This is not sustainable. Just like when it was down here, it wasn't sustainable. And this is a little more prolonged. So I would expect that this is going to precipitate the next little leg that's going to define, you know, the middle part of the week. I don't want to say it's going to define the back half of the week. I think that's probably giving it too much credit. But it's not going to be nothing, and it's going to move. The mistake traders run into here is trying to guess which way it's going to go. I don't fucking know. But it's going to go. And the nice part is when it gets tight like that, it's going to go farther than you expect, and it'll give you plenty of an opportunity to make handles. So be patient with it. be patient with it. The open today should be whippy. It should be choppy. It's going to be two-sided, and try not to get chewed up with it. Be patient. Wait for the opportunity that's going to come from those compressed Bollinger Bands. Take advantage of that. Make your day. Move on to the next day. If the middle of the day gets choppy, don't fall into the trap of trying to overtrade middle to late in the day to, because you're trying to catch every inch of a tape. This tape, when it gets whippy like this, it doesn't want, it dares you to try to catch every inch of the tape, and you're going to get caught the wrong way. You're going to be taking paper cuts and doing things that are unnecessary before the next real leg comes, which is something you can get involved in and just stay in, for a day. Maybe that's today, maybe that's tomorrow. We'll see how long these Bollinger Bands want to stay tight. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room, and I'll talk to you tomorrow.